What's up guys, today we're going to talk about the difference between an index fund and picking individual stocks as an investor. My name is Kevin Murray and this channel is all about basic finance tips and long-term investing. Before we talk about that, we first got to know the mindset and fundamentals, core foundation that all great investors have. First, it really starts with the mindset. If you don't have your mindset straight in life, you're going to get no results and you're not going to get nowhere in life. What is the first thing that all great investors have? Number one, they have a long-term mindset. If you want to create wealth the right way in the stock market or investing in general, it takes a long-term mindset. It's going to be a journey. It's going to be a process. Everyone starts somewhere in life and everyone has their story to tell. No one really cares about that grind. Everyone just cares about that end result of how to make this much in the stock market. Look at the great Warren Buffett. He created billions of dollars of wealth in the stock market from 50 to 60 years of compounding interest working for him in life. He knew if he took the patient approach, disciplined approach, he'll make really good money in the long term. But most people aren't disciplined or patient enough to do that route. And number two, you got to know what compounding is. Essentially, the more you have of it, the more it's going to grow. The more you put into the stock market or into yourself at a young age, the more it's going to grow over time. You might not see it in the first few years when investing, but you're going to see it 10 to 15 years down the line. Think of it just like of an exponential curve like in math. It's going to get crazy. Number three, being unemotional. Don't be attached to the short-term fluctuations of stock prices. You're investing into a business, not a stock. Number four, being disciplined and being patient. Those are the most important lessons I kind of learned early on as an investor in the stock market. If you kind of pound that into your head, you're going to separate yourself from the 99% of investors out there. You're going to be the top 1%. I don't like comparing myself to other people in society. I only compare my process to myself each and every single day and see if I grow as a person and just compounds over time. As a stock market investor, you got to be patient. Wealth is not created over time. And you shouldn't be putting all your money all at once into the stock market and blindly investing. You shouldn't be putting all your money into one stock thinking this stock is going to be the next 10x stock like Tesla stock. I'm a bull for that stock, but don't be overconfident with that stock for the future because of that big run up in the last couple of months. Number two, discipline. If you want to take this approach with investing and make 20-30%, are you willing to do hours of research on individual stocks, understanding that company on a high level, knowing the risk factors and understanding their financial statements? It takes hours and even days to do research, in my opinion, in my case. Let's go back to the main part of the video. What is an index fund? An index fund is a type of mutual fund or exchange traded fund with a portfolio constructed to match or track the components of a financial market. It sounds confusing at first, but it gets really easy. One of the most popular investments out there to invest in is called an index fund. Most financial advisors tell their clients to invest in the S&P 500 index, meaning you invest in the 500 largest companies in the US. Think of like a pie chart and you kind of get like everything on the plate or everything from the restaurant. You kind of get one of each. You get a share of Amazon, you get some Apple, you get some Tesla, you get some Ford, you get some Salesforce. Any company you could think of on the top of your head is essentially in this index. It's very low risk, very conservative, but you get average return in the stock market. Historically, over time, the stock market has always been going up because of what? Innovation, disruption in our society. The economy, GDP has been always increasing. We've always been moving forward, not backwards in society. There's a book too, a very famous book called The Little Book of Common Sense Investing. The guy who made it, his name is John Bogle, and he created Vanguard company financially. Tells you most mutual funds, hedge fund managers can't beat the market. Historically, over the long term, 10 plus years, mutual funds and hedge funds can't beat the market return. And it's a very interesting book that makes you aware that any average investor can invest. Society or the school systems don't teach you any of this stuff. Let's look at this data, the returns of the S&P 500. Over time, historically, the index returns about 10% annually. And that's really good as an investor for yourself in the long term. Bonds give you 1 to 2%. Savings accounts give you less than 1%. And inflation is 2%. And if you look at that, my money is getting devalued each and every single year. And I could invest into the stock market like the S&P 500 and I get 10% annually. That's over the long term. But sometimes the market's down, sometimes the market's up. Over time, if you average it out, you get around a 10%. And like I said before, you get diversification. It's lower risk and low cost. Less than a 1% expense rate. How do I invest into these funds that return 8 to 10%? One of my favorite ones is called VOO. Any publicly traded brokerage has this, like Robinhood, TD Ameritrader, or Fidelity. And we kind of look up April 15th, 2016. Over time, you see the percents. Over a span of 6 years, you get a return of 93.20%. So it's above the average. And these gains, we have been in a bull market for 6 to 7 plus years. And if you look at it, look at the charts. The market has always been going up. My second favorite index invest in is called the Vanguard Total Stock Market Index Fund, which is called VTI. What is the difference between VU, Vanguard 500 Index Fund, and VTI? Look at the name. You have 500 companies. Essentially, you're investing in 500 companies. And this, you're investing in over 3,000 companies. You get everything in the stock market, one of each. Over the long term, this ETF performs maybe 1 or 2% better because of why? Because of Tesla. This fund takes into account of like small caps or mid caps, companies that haven't exploded into the market yet, like Tesla, that because of that big run up. So either one of these, in my opinion, are good for the long term. Just remember to cost average up each and every single month, and you get a return of 8 to 10% each and every single year. Takes no skill, but just an awareness. Let's transition into my kind of like strategy in the market, picking individual stocks as a long-term investor. Let's look at Tesla from 1 year ago. It was at $90.89. And it climbed to what? $661.75 in this 1 year period. If you invested $1 in this company, you would have received a 572% return of investment. That's crazy, right? How we talked about before. If you want to pick an index fund, it's very conservative. I mean, easy gains, right? You get a 6 to 8%. But if you do kind of like this route, like not like what like a lot of people want to do, take the time to research and understand these companies on a high level, reading 10Ks, 10Qs, and listening to conference calls and understanding their TAM, you could get these gains, but it takes a lot of work. Let's look at Apple. It was at $61 a year ago, and it's up over 100% from 1 year ago. Look at that, 100%. You could have got only 10% from the VU or VTI, but you get 100% from Apple or Upwork. This is one of my investments. Started at $5, and now look at it right now. And look at this gain on this. Over return on investment, over 700%. And Eli, Callaway Golf, which owns Top Golf now, from a year ago, 183%. So it shows like the difference that retail investors can beat the market, but it takes disciplined research. Only 5% of investors actually, or people can actually do this in society, and like over time you could do this. You can make these crazy returns. Hope this video provides some value for you. Thank you for watching. Subscribe and peace out.